Hi guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. Excuse me. Okay, so it's time. It's time to get this party started. Oh, this is my bias chart from yesterday. Let's go ahead and delete that one and let's grab a new one. I forgot I didn't delete that yesterday. Okay. And let's see here. Let's start with the euro dollar. Okay. All right, here we go. So here's the euro. All right. So the euro dollar. Now, what do we do with this? All right. So the euro dollar, I think what was we rallied a little further than I thought we were going to yesterday, and I guess one of the let's note a few things. Okay. So if you take the move from you take the move from up here at 140. Okay, and Paul Franco probably remembers this day. Because I shorted the euro literally at 139 like 80. I mean, and some of you actually remember that day. I think Draghi announced he was going to consider doing quantitative easing or something like that, and the euro spiked up, and then it just reversed, and we got short the euro dollar at I think I got short at 139. I want to say 139.80 something, and I covered it at like 132. Somewhere down here, like a couple weeks later. Okay, you might remember that day. Well, that marked the peak of the euro. Of this move down. We hit basically a 38% or a 24% retracement of that move. Okay. 24% retracement of that move was hit yesterday. What also was hit is the underside of this trend line. We have this trend line that, this is our flag pattern that we've been following for so long. We hit the underside of that trend line yesterday as well, or pretty damn close to, right? We also hit 161% extension yesterday of the last move lower. So we hit that at 1342. Like I said, yesterday I was short the euro dollar. I shorted it at like 113 was my cost average. I got out at 112.80, took 18 pips, and I was done with it. Now what's interesting today, all right, now that we've seen all that, let's remove this fib, okay? Where we were supported overnight, you would have expected at our breakout point. So do you see that? The high here, 112.40. The low here, 112.36. So today, 112.40 is going to be support. Now, I'm going to write down 112.40 first of all, but that's not the only number we should write down. 112.40. Okay, that's key support. But if let's say Janet Yellen is relatively hawkish, okay, if she is relatively hawkish, we could very easily come down and retest today. Retest this support level, which comes in at the high here at 111.45. Okay. Now I'm assuming that that's a 7/8 of this move. It is. All right. So we have a 38% retracement and a 7/8. So 111.40. Because if the dollar 1.11. Okay. You know what? Where'd that come from? Okay, I'll do it like that. In the event that we break through this 112.40 today, following Janet Yellen's testimony, that happened for a reason, right? It's happening for a reason. If we break through here, why did we break through there? Well, we broke through there because Janet Yellen was extremely hawkish during her testimony. And if she is, then you have to imagine the dollar is probably going to get a squeeze. That means the euro dollar is probably going to get a little long liquidation here. And so I would assume that we'll drop. This is only 100 pips. But 100 pips is 100 pips, right? So if we break through here, I would immediately target 111.40. That would be like my, next, next up, here we come, okay? Will we get down there today? I don't know. I don't know if Janet Yellen's going to be that, I don't know if she's going to be that, dovish, or hawkish, excuse me. All right. Now, if she's dovish, we are going to challenge yesterday's highs, which are 113.42. I'll write down 113.42. And if we break that, that we're on our way. Sorry, I didn't mean to yawn on you guys. We're on our way, in my opinion, we're on our way to like 115. Okay, if we break through those highs today. All right. But I would expect that we have a fairly quiet market between now and then. But that's what I'd be looking for. Okay, we are in a bullish trend right now. That trend can turn right back to that can turn right back into a range environment following today. So just because we're bullish right now, and we have been bullish for the last couple of days, if we slip back, through some of the support here, we're going to go right back into a range. Okay. All right, let's go over into the cable. The pound's been hitting new highs. We had a weaker manufacturing production number overnight, but the pound's still squeezing. The pound's been kind of squeezing today. So, but the pound's been really choppy. The great news is we are technically, we're working just like we should. Technically. Support, resistance, 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 support, support. Okay, I mean, yeah, talk about like perfect. Right at a 618, bounced right off of support. We had written that down. It's like, bam. It's perfect. Now, it's going to get a little messy right now because really the cable it's got two levels which are very important at this stage in the game. It's got this resistance, which obviously if you have a dovish Janet Yellen, I think the cable is going to be a great long side trade, just like the euro breaking through 113.42. I think a move beyond 144.65 is going to be a huge breakout for the cable. 144.65, right? Let me double check that. What was that high? 65, yeah, 66, but that's all right. 144.65, huge resistance. Okay, we're in a range. Now, if we break through that, the cable is going to continue its recovery, efforts. We're probably heading out to, probably to 150, and then probably reverse up there, right? The flip side is if we break through the support, we're probably coming back right back down to these lows. Now that support comes in at 143.50. All right, that's huge support. And yes, we are in a range-bound environment. 140. Wait, that's not right. 143.50. That's not right. Hold on. 146. Okay. Now, as you guys can see, this is this right here is the 350 pip trading range right here. We're pretty much in the middle. We're close to. All right. That's not giving you a whole lot to work with. All right. It's not. I mean. Could we find maybe a smaller support down here? Maybe like could we go to the pound and say, okay, well, there's some minor support here, right here. Actually, this is probably pretty minor support, 144.50. I'll write that down because it's not too far away. 144.50. Okay, but both of those are support areas. But because obviously you can see that pivot there overnight. Okay, but I would deal more with the bigger range, right, versus the little range. But the thing is if the euro starts to break down below like that 112.40, the pound's probably on its way down too. You know what I mean? It happens for a reason. Janet Yellen is more she's more hawkish than expected, and the dollar starts to firm. Okay, but the cable very choppy from here. It's been very well mannered, but now it's going to be a little messy. All right, let's take a look at the Swissy. So I'm going to reiterate, I bought the dollar Swiss yesterday. I am long the dollar Swiss. I'm long at 97.08. I'm going to hold this position through Janet Yellen's testimony. Okay. We've gone from 103, and really, the slippage started at 102, but really from around 103 to 97 cents. So, we've lost almost 600 pips in a week, a little bit more than a week's time. That's a huge move. Okay. The dollar Swiss is this trend line here spawns all the way back to 2001, just so you know. But we have here, this is 2015 when the Swiss National Bank removed the floor. Hi, hello, how you doing? Hello, and here we are. Okay. Now we haven't been all the way down to 96 cents, but 96 cents ultimately would be the place that I want to be long the Swissy. I bought some yesterday, but a little bit, a little bit lower would not surprise me. Okay. Now, if you go over to the hourlies, let's go over to the hourly Swiss. You can see it's trading heavy. I mean, hell, I don't even know why I'm long. I'm long more to just have a little bit of dollar exposure because I just don't think Janet Yellen's going to be as dovish as everybody believes. But, this is very much a flag pattern. So you look at it. I mean, that's a flag pattern. You know what I mean? And so if let's say the flag pattern works, I mean, you're talking here. Let's get rid of some of this stuff. We don't need that. We don't need this. We don't need that. We can keep an eye on that. And that points to sub 96 cents. Oops, I didn't mean to move that, but something like that. Okay. All right. So 96.50 is the 127% extension of this last move. Okay, 127% extension comes in at 96.56. So I'm going to write that down as support. Okay, 0.9656. Now resistance is basically 97.85, which is this, right? So we'd have to take out 97.85, oops, to take the downside pressure off. Okay. And right now, I'm going to put it as it's still a range, but we'll see. We'll see what happens a little bit later today. Like I said, we got to. You can see the harmonic pattern that's built here. It's, can argue it's a Garley, But regardless, it's you know, it is whoops, it is in a bigger range. All right, it's trying to break down, but I think it needs help from the rest of the dollar pairs today in order to really break lower. Okay. All right, let's take a look at Aussie dollar Swiss. Let's go over to the yen. All right, so here's the yen. I am out of my dollar yen shorts. I've been, you guys remember from a Friday and a half ago, I was short the dollar yen at 120.80 was my original cost average. I've ridden this down and made really, I've done really well with the dollar yen and, some other yen pairs the last couple of weeks. I exited all my yen yesterday. Okay. So I do not have, oh, you know what? This has to go up here. Sorry, guys. This is taking up too much room. Hold on. There we go. That's more like it. Okay. This is oh, that's not what I like. This needs to be switched. Sorry. Let's take it. And I needed to remove that to give us more room here on the chart. All right. So the dollar yen, we hit 127% extension. Boom. Okay. So that's good. Now let's remove this really quick, and let's remove this. This is very easy analysis for me. Not like it's easy, like, oh, I'm going to make a whole lot of money easy. I think it's easy for us to identify where the key levels are. Okay, so you can see right here, this is 115.50. Now, why is that a big deal? Why is 115.50 a big deal? Well, 115.50 is a big deal because if you go out to, the daily chart, you go to over here, spike low down here was 115.56. That was the lower end of our range, and you know what? That is capping us. Let's go over to the hourly. Come on. There we go. Okay. So here's 15.50. It's a big deal. Okay. Support right now. $14.25. So we are either going to break through 14.25 today, and if we do, I want you guys all to know I'm going to start shorting the yen pairs again if we break through 114.25, because that means the dollar yen's on its way to, completing its head and shoulder pattern. We're on our way down here, which I think ultimately is what's going to happen. But Janet Yellen could really she could really reverse all this today. She could. But it's interesting. Janet Yellen could be hawkish, right? She could end up being hawkish. The dollar will strengthen. The dollar will strengthen. And if the dollar strengthens, will stocks fall? See, if Janet Yellen is hawkish, the stock market should theoretically fall. And if the stock market falls, will the dollar yen fall with the stock market, or is it going to rise with Janet Yellen's hawkishness? That I do not know. That is the million-dollar question with this pair. So that's why it's a little, you can see everybody else is confused too. That's why we're sitting here. If everybody knew exactly what was going to happen, we'd be directional right now, but we don't, and we're not. So 115.50, 114.25, let the market guide you here, because I don't know the answer. 114 or 1.1425 is key support, and if we get back above 1.1550, then we're going to go back into this stupid. We're going to go back into this stupid range, and I don't want that to happen. Really, I don't. But if we do it, think about this. We come back and break through here. We're going to go right back into this range, and it's going to drive me absolute bananas. All right, because I don't want that to happen. I'd actually like to trade the yen on the long side, like short dollar yen, short euro yen, short Aussie yen, short, short them all. I'd love to. But if we get back up here, that trade basically goes out the window. Like, bye-bye. All right. Let's go over to the dollar Canadian. Dollar Canadian. All right. As I pointed out a little earlier, if crude oil finds a bottom, this dollar Canadian, or the Canadian currency is really going to start to strengthen here. I'm not really too sure what to do with the Canadian at this point. I can tell you this much: resistance is at 140, support's at 130, 135.50, but I think we can be a little better than that. Okay, so wouldn't that be safe to say that was the neckline of the inverted head and shoulder pattern, or something that was close to that, right? So 140, 138, right? It's been 137.85, but basically 138. I mean, it's really hard to gauge this one. I'll tell you this much. I think this 138 is really key support, or 137.85, 137.85. I really do think that's key support. Resistance, on the other hand, I mean, 139.20, maybe all the way up to 137.75 or 39.75. I'll write down resistance today at 139.20. It's just not going to be great resistance. Okay. All right, we're in a range here. Okay, when I come back, we'll do the Aussie, we'll do the Kiwi, we'll do the X, we'll do the Peso, we'll do all that stuff. So I'll be back in a few minutes. Don't go anywhere. All right. All right, guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Okay, so we're going to finish up our analysis here. Let's get over to the Kiwi. So here's the Kiwi. Real choppy as it has been, and I'll tell you, regarding the Kiwi dollar, what it seems like to me is, we're getting this ever so tightening range, and I think we can actually take a step back for a moment. I don't want to delete everything. Maybe I will, but okay, let's do that. Let's remove all these lines, and I'm drawing everything again. Okay, so we got this, right? That's one, right? You zoom out a little bit, we got this. That's two, right? Okay, so that can pretty much clear up a lot of things. You can see, we're now starting to tighten in a pretty good range here. Be a little bit more specific about this analysis here. There we go. This, I think, is pretty good. All right. Okay, so there we go, right? Tight range. We also know that this is key support, right? That's a given. All right. Now it brings us up to where we're at currently. So what do you do here? My opinion is probably not a whole lot. I mean, you short a move to 67, 67.30. You buy dips to 65.60, and that just kind of leaves you in the middle of this range where you go, okay, well, I'm going to short here, or I'm going to buy down here, and maybe you just don't do anything until you get here or there. Because the good news is, if you look at the Kiwi, it's setting up really nicely for a move. You know, whether it's a breakout to the upside or a breakout to the downside, who knows? But it's got a good setup, right? So 67.30, 65.60. Okay. I hate to give this to you, but I mean, it is what it is. 60.6560, right? Is that right? 65.60 and 67.30. And we are in a range. So, you know, you look at the Kiwi and you're like, okay, well, what, you know, why am I even going to trade the Kiwi right now? You know, what incentive do I have to actually be long or short the Kiwi dollar? You know, none really. All right, let's go over to the Aussie. Okay, so here's the Aussie dollar. I mean, what do you do here? I mean, you got this little head and shoulder pattern set up, but it's in the middle of a range, which you guys know. If we had a head and shoulder pattern at the top of a range, you know, if we were in a strong uptrend, it'd be something. But you know, you got a little, I guess, a little head and shoulder pattern setting up around here. But I'm not thoroughly excited about anything that I see here either. Man, this is, you know, not even that valid either. Okay, so I mean, this 618 is obviously very important because we pivoted from there, right? Right here. That's obviously very important. Any resistance back up here is probably going to be, that was a 786 retracement rejection, right? It was. So, you know, it's kind of like the Kiwi dollar. What do you do with it here? You know, I don't think there's anything to do while you're in between, you know, the 72.40 and 69.85. And I know that's not going to give you any help with the Aussie dollar today, but doesn't it seem, just looking at it, aren't our efforts probably we're going to be better rewarded if we're trading something other than the Aussie or the Kiwi today, right? I mean, unless you're getting way up here or way down here, you know, 70 cents or 72.40, right? So, you know, 70 cents is support. It's actually 69.85, but whatever. 72.40, and really we're just kind of stuck in a range. And that again, what do you do? You know, there's not a whole lot to do here. We're mid-range, and we're probably going to rip higher or, you know, sell off pretty aggressively. But, you know, we're going to find some support or resistance not too far away, maybe another 100 pips from where we're at here. Okay. All right, let's go over to the dollar index. So the dollar index, this is really key today. Like I mentioned earlier, and I know a lot of you guys are just tuning in, you know, over the last 30 minutes or so, and you missed what I said earlier about the dollar index. The dollar index is at a make it or break it today. Janet Yellen's going to absolutely punish the dollar, or she's going to save the dollar. Pretty easy. Okay. See, the dollar's in breakdown territory. Do you see that? We broke down yesterday. So if Janet Yellen is a little bit more hawkish than expected, the dollar's going to rip back up. You're going to see following, you know, you're going to see this green candle today. It's going to look like this, right? Then you're going to end up getting a false breakdown, and the dollar is probably going to head right back into the upper end of its range, right? If Janet Yellen's hawkish today, you know, flip side is, you know, flip side is she is dovish, and, you know, we start breaking down like that, and we're going to be trading down in the lower end of our you know, our range later, here coming up. So like I said, today is either she's going to save the dollar or she's going to absolutely destroy the dollar. But it's already on the cusp of breaking down. But if she reverses it, it's going to be a false breakdown, and we're going to go right back up here again. All right. So what do we do now? I mean, how do we identify if it's breaking down or not? I think you got to mark the overnight lows. Obviously if you break back below 95.67, then that's going to tell you we're going lower. 95.67. That's going to be support. Resistance, though, on the flip side is, we break through some of this. Now let me just grab this line. This way I don't have to redraw. We break through there. Right over there. Over where? Under here. Underwear. You said underwear. Gotcha. Gotcha again. Oh, I'm good. Yeah. Gotcha. All right. So hold on. All right. I assume if we get back up here, I mean, you can also say intraday. You can also say something like this. If we get back up above, see it's support, 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 resistance, right? Something like this, actually, right? Support, 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 resistance. So the highs here would be 96.30, basically. I mean, that's going to take some downside pressure off 96.30. So right now, we're trying to break down. I'm not going to put it in a bearish trend yet. I'm going to keep it in a range, but after today, I think we're going to, we'll either stay in a bearish or stay in a range or go into a bearish trend. Okay, either or. Let's go over to the peso. So I was short the dollar Mexican peso twice yesterday. I made 1,100 pips 2 times. I shorted it yesterday at 1882, shorted at 1882, okay, and then covered it when it dropped to 1888 or something like that, and then I covered it at 1875, I think, and then I shorted again yesterday afternoon at 1881, and I covered it at 1870 last night, somewhere around here. So I've been making some pretty good money shorting the peso. If the market gets risk averse, then we're going back up here to 1890, but I think ultimately resistance is at 19. Support is at 1860. I think if we break through 1860, which you see that spike low there, if we break through 1860, then that's going to, obviously be probably it near term for the peso. So US dollar, Mexican peso, it is in a very strong uptrend still, okay. Support 18.60, and I think that's going to be pretty key support. Resistance 19, that's going to be key resistance. If we get to 19, by the way, I am shorting, so I'm telling you that ahead of time. I think you all know that, but I'm just reiterating so you know. If we get to 19, I am going to turn around and short it, just so you know. Okay, let's take a look at the Norwegian Krona. This is a narrow range too. We are narrowing into this range, so it's right here. Okay. And this, all right? which is really interesting. Come on, blue line. There we go. All right. Really interesting here. We have to get back above basically this red line to turn bullish or to take this downside pressure off. But you can see this is like the underside of this trend line here. Dot, dot. Basically, you know, support, resistance. We have to get back above here, back above this yellow trend line to resume this uptrend. But we're capped right now. We're in a really tight range. I think the range is from 18 or 845 to 865. I guess we'll just mark that. Okay. US dollar, Norwegian Krona, and this is going to be influenced by crude. So, obviously, if crude starts to rally, you short the US dollar, Norwegian Krona. If crude is selling off, you buy the US dollar, Norwegian Krona. 18.45, and then resistance is 18.60, at least 65. And at least that's how the correlations have been recently, with the Norwegian Krona. We've slipped into a range, and the US dollar, Swedish Krona, I don't know if there's anything to do here, but we'll take a look. Yeah, it's just really choppy. I don't think there's a lot to do here just yet. Very choppy. Very, very choppy. Okay, so here's your bias chart ahead of today's FOMC testimony from Janet Yellen. It's going to be an important day today. I will reiterate, today is a do or die for the dollar. I am going into today with some long dollar Swiss, but that's it. Just a half size position. I bought it yesterday at 97.08. I'm going to try to hold on to it, but I'm not going to hesitate to get out and take a loss if I have to. Okay. So there you go. Now, let's take some questions. Let me see if I can grab some questions. By the way, stocks are pretty strong right now.